Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. On the eve of the budget, the economic survey projects sluggish growth conditions next year, pegs FY26 GDP growth rate between 6.3% to 6.8%. Growth rate for the current financial year estimated at 6.4%, the slowest in 4 years.
Economic survey highlights reforms to strengthen startup ecosystem, including angel tax abolition and tax cuts, while noting women as key beneficiaries, with 73,151 startups having at least one woman director and 3,100 crore rupees invested in women-led ventures.
The economic survey warns of a churn in the labour market due to the rise of artificial intelligence, says the problem is magnified for India given its size and its relatively low per capita income, suggests that government tax profits generated from the replacement of labour with AI, also argues that the labour augmenting potential of AI should also not be ignored.
Ola Electric Bhavish Agarwal takes a dig at competition, says they celebrated too soon, adds the game is on and dares competition to meet him in the market. That's a CNBC-TV18 exclusive.
Apple's revenues rose 4% in December quarter, but iPhone sales failed to meet market expectations. Despite weakness in China, Apple bets big on emerging markets. As India sets a record in December quarter, the company plans to open 4 new stores in India. Well, those were the headlines we've been tracking for you this evening. The economic survey has highlighted key reforms aimed at boosting India's startup ecosystem, including the abolition of angel tax, expanded safe harbour rules, and streamlined transfer pricing assessments. Now, these measures, alongside tax deductions for e-commerce and data centre reports, are expected to enhance India's global competitiveness, attract more investments, and ease business operations for startups across industries. Women entrepreneurship found a big mention in the survey, as it noted that the segment has seen significant growth, with nearly 73,151 startups having at least one woman director as of October 2024. Now, government-led initiatives like the Startup India Seed Fund Scheme and the Credit Guarantee Scheme have provided crucial financial support, noted the survey, with over 3,100 crore rupees invested in women-led startups. In fact, as much as 3,10,711 crore rupees has been invested in 149 women-led startups through alternative investment funds, or AIFs. However, the survey warned that women still face barriers, with only 22% of MSMEs owned by women, and that initiatives such as the Women Entrepreneurship Platform and WeHub are helping bridge these gaps, fostering a more inclusive and empowering environment for women entrepreneurs. Let's take a look at what startups want from Budget 2025.
As we are approaching budget, what are some of the key asks from your perspective?
So, I think policy initiatives can come in the budget, or they can come anywhere, any time of the year, not outside the budget. But 2 or 3 things that I think are very useful. Of course, we would like a top up to the fund of funds for startups, which is managed by SIDBI. That's useful and important. I would like to see ESOP taxation get more employee friendly. I think that's important for startups to be, to be able to attract and retain good talent, because they don't have a lot of cash to give, but they can give ESOPs. I think something that will encourage independent directors to join startup boards for better governance of startups. So you need better quality independence. Until about 2010, independent directors are allowed to get ESOP in unlisted companies. I think that has been stopped. Maybe that can be reintroduced, or at least be considered. There are 2 or 3 things I can think of.
I think this is a very, very, very critical budget, right? Especially it's coming after Donald J. Trump is now in power. I think we really would like to see a more focused on the startup ecosystem. We want to see much more focus on the AIF ecosystem as well. I think there's just too many different regulations that are getting mixed up with mutual fund regulations and with private equity regulations, and it's causing a lot of havoc. We already have to deal with a market that innovates and moves very quickly. And we need to move ourselves as quickly as well. So I definitely, maybe a renewing of that 10,000 crore commitment that had come to SIDBI, possibly making that 20,000 crores. See, that 10,000 crores, by the way, led to 1 lakh crore worth of investing. It was just 10% of the capital that moved this market. If we can renew that commitment and have specific allocations even for space tech, have specific allocations for fintech, these are places where we need to move very, very quickly. I would love to see what the government is going to do now with this AI, the 10,000 crores that was allocated for AI. Where are we going with that? It probably need to make it that from 10,000 crores closer to 50,000 crores to 1 lakh crores.
Some degree of simplification, and in terms of, I think the policy intents are good. I think the translation of policy intents into actual practice, I think that, to my mind, would be something big. And the way that can be done is that any tax claim made by any tax officer, which is then subsequently overturned by the courts, I think that tax officer should be held accountable for it. Right? And I think that if that discipline is brought in, see, with the cash system of accounting that the government follows, it is in, there is a lot of pressure, and the easiest thing for a tax officer to do is to put claims which will later on be turned over. But to contest a claim, you have to deposit X percentage of money. So a lot of, I would say, claims happen on companies and businesses across the country, which the tax officer fully knows will get overturned, but he's met his budget because of the cash system of accounting. So if the government were to change to an accrual system of accounting at one level, and two, people were to track in the IT department what percentage of persons' tax collections have actually been overturned subsequently, I think this might reform the system.
Ola Electric launched its new Gen 3 electric scooter range with prices starting at 79,999 rupees, going all the way up to 1,69,999 rupees. In a freewheeling chat with CNBC-TV18's Ritu Singh, Ola Electric founder and CMD Bhavish Agarwal spoke about the pricing strategy on gaining market share and also his budget expectations. Take a look.
I'm personally very excited. I think with Gen 3, we take the industry to the next level. And then the event was also titled Next Level. So it's truly, in 3 years that Ola Electric has existed, Gen 1 was started January 2022, Gen 2 was August 2023, and now Gen 3. Every 18 months, we've changed the paradigm. So we're going next level in everything, in terms of performance, higher power, range. Most importantly, range. We have done a lot of technology innovations which are possible only because of our vertical integrated strategy. Everything that we do in-house, we have actually increased range on the same battery capacity by 20%, right, because of all the technologies, and we've brought in our own cell into the Gen 3 product. So all of these combined really improve performance, really improve safety. We've increased the product breadth. We go from 69,000 rupees all the way to 169,000 rupees. So that's a very wide portfolio of 12 products that we have now. And our strategy remains clear: make all Indians access an EV of their choice. If somebody wants a lower priced one, we also have the Gen 2 products which are continuing. If somebody wants the best in class, the Pro Plus, which is the best scooter reimagined again, the Pro becomes Pro Plus. People get whatever they want.
Speaking of market share, you've gone from under 19% in December to nearly 25% as per the latest data. What has caused that kind of a turnaround with the kind of spiral down that we've been seeing for the last couple of months?
See, there were two things that really contributed to us getting back the market share, and not just market share, we're back to number one. We're back to where we belong, and our competition, in my view, थोड़े जल्दी खुश हो गए वो. But competition is good. Healthy competition is good for the country, good for the consumer, and I welcome it. I love the competition, and I love the fact that others are bringing new products, and we will outcompete them on product, on innovation, on manufacturing costs, everything. We are there to compete and outcompete everybody. What has played in our favor in the last 3 months or so, right? Firstly, the service challenges are behind us, and all the issues are solved. And the consumer brand challenges are also solved. Now, consumers earlier were thinking, oh, Ola has a service challenge. Now, all of that has gone. So, and the customers are voting with their purchases again. And you saw that through January, our volumes increase. Second, also what has happened is we were actually lagging behind in distribution expansion. The incumbent competition had opened up their entire distribution to their EV products, and we had only 800 stores till November end. Now we have up to 4,000, and all of that also through January you saw them getting impact on our volumes. And the store expansion actually takes a few months for a new store to stabilize. So over the next few months, we actually expect continuing benefit on volumes from the new stores.
You've said before that your target sort of market share range is 30 to 35%. You're still at 25%. How soon before you get back to that? And will this discount strategy sort of continue to gain share?
So our pricing is actually very thoughtful. If you see, we have both the products available, Gen 3, whole line of products, and Gen 2, whole line of products. And I wouldn't classify it as a discount because Gen 3 actually is, very rightly priced. The pricing has been thought of with a balance of both affordability for the customer as well as margins for us. And our cost of production comes down with Gen 3, so that allows us to be more aggressive on pricing. Gen 2 we are positioning as those who want an EV, but we're a little more holding back because of the price. Gen 2 will bring that audience in. So we think Gen 2 will increase penetration of EV in the scooter space. So it's actually a nice killer in that sense. So 30-35% is what I'm continuing to guide the street on. And if you see the last 2 weeks in January, we've actually been in that zone on a weekly level. We've been in the 30+ zone on a weekly market share level. And I think with all the new products, with the 12 products that we have now and the pricing, we should get there. And, if competition is aggressive on pricing, we have enough headroom to be aggressive on pricing.
I don't know if you heard Mr. Rajiv Bajaj at the CNBC-TV18 event saying, Ola to Ola hai, but Chetak to Shola hai. But the gap between you and your competitors right now is also very close. So what gives you the confidence you'll be able to, bridge this sort of in the coming months?
See, my response to competitors is I think they celebrated too soon.
Yeah.
Right? Let them bring their response to our announcements today. And we'll see. Market mein milenge unse. Market mein mil hi rahe hain, and we are back to number one.
Yeah.
And we have all these products, the technology. The incumbent ICE companies had a one-time advantage of distribution scale, which we have nullified now. And the product advantage was always with us. It has enhanced with our Gen 3 portfolio. And the pricing advantage also with our better cost structure is also with us. So I think game on.
All right, it's game on, says Bhavish Agarwal. Moving on, AI-powered MSP startup SuperOps announced a Series C round of funding totaling $25 million. The round was led by March Capital with participation from existing investors like Z47 and Addition, and brings the startup's total funding to $54 million over 3 rounds. SuperOps co-founder and CEO Arvind Parthiban caught up with CNBC-TV18's Jude Sanat to chat about entering new markets and how hard it's been for the SaaS market to raise funds. Here's a slice of that conversation.
One of the external investor was interested and they was trying to invest in us. March did a small round last year. They put in a $4 million check last year. And this year, the moment everything was going well, we got our product market fit. We had some good traction in the SMB market, and we saw some good traction in the mid market as well. The moment these 2 engines started working well, March internal investors had the confidence. They didn't want an external new investor to come on board, so they basically said they will want to double down and invest in this.
Right.
So that's
and look how that panned out. It's your largest round till date, and at 25 million, it's no mean feat, no doubt. But moving on, Arvind, could you help us break down in terms of what this funding will be used for at the get-go? What are your priority areas, and where do you go from here really in terms of investing this money in which space?
Yeah, so our biggest priority this year is we cracked inbound and SMB engine very, very well. There is really good growth, like world-class numbers over there. Our idea is to go up market, cracking the mid market, which will essentially help us in growing in the global markets.
Right.
So we want to expand in different regions. Right now, if you see, majority of our customers come from North America and UK. We want to be in the rest of the world. We want to make our presence. So that would be the first one. And second, it goes without saying, everybody are talking about AI. We did launch our Monica AI last year, but we want to go deeper and how this is going to completely change the MSP industry. So we're going to heavily invest in the AI. And third is also we are launching a new product, IT endpoint management software, where we want to enter into this market and go deeper into serving in that market as well. These are the 3 key areas.
In this climate, with regard to a lot of uncertainties and funding slowdown, if I may use the word, where do you see the SaaS market growing from here? If I were to ask you to hazard a guess, what is that overall growth projection to be for the SaaS market at large?
See, definitely SaaS market is going to grow significantly. Yes, in recession, the great companies are built. What I would say is we have to invest in the right area. Are you building and solving a right problem? Are you investing in right technology? That is AI. AI is actually level set the field. Now that DeepSense announcement has also happened, it's not only for the big companies. Any company can actually challenge any large companies you will be able to solve the problem better with AI if you invest in technology and build the right problems. SaaS is definitely going to grow.
By
it's
how
an
much?
opportunity.
What do you think?
Again, like the way technology changes every year, right? I can say how much we can grow.
Yeah.
You would definitely want to grow at least 200 to 300% in the next 1 or 2 years. Every year we want to grow at a 200 to 300%. Opportunity is there, but we just have to make sure we solve the right problem. Right?
Okay, so 2x, 3x growth in the near to medium term, very achievable for you?
I'm hoping for a 3x growth this year.
Okay.
And probably 2x the year after.
On that note, it is time for us to head into a short break. But coming up next, Mintoak, a merchant SaaS platform, has bagged 71 crore rupees in a secondary funding round led by Z3 Partners. A conversation with the CEO and co-founder Raman Kanduja. On the other side, stay tuned. Welcome back. You're still with us on Startup Street. Mintoak, a merchant SaaS platform catering to banks and merchant acquirers, has bagged 71 crore rupees in a secondary funding round led by Z3 Partners. As part of this transaction, Z3 Partners will acquire a minority stake from some of Mintoak's early institutional investors. In February 2023, the Mumbai-based startup had raised $20 million in its Series A funding round led by PayPal Ventures and others. Joining me now to discuss this further is Raman Kanduja, the CEO and co-founder of Mintoak. Also with me is my colleague Shruti. Raman, thank you so much for taking time out and being here with us on Startup Street. You know, the last time we spoke, you had raised funds last year in February. Take us through what the growth has been for your products in the last year. What are the kind of efficiencies you've brought for your clients since then?
Interesting question. When we last time raised funds, that was Jan of 23. That was when PayPal Ventures and British International Investments, along with HDFC and Pravega, invested. This time, incidentally, it's a secondary round where the money is not coming into the company, but some of our initial investors are cashing out a small part of the stake. From the last time, which is Jan 23 to now, our merchant base has grown almost 3 times. We are now 3 million plus merchants. That time, we were working with HDFC and SBI was just starting. Now we have Axis Bank, Yes Bank live, and we have a few more in the pipeline. Today, that time we were working with the largest merchant acquirers in India. Today we are supporting the largest merchant acquirer in the UAE as well, which is Network International. And we have presence with 3 clients in the Middle East and 2 in Africa.
Hi, Raman. This is Shruti quickly stepping in. Like you mentioned, you've raised 71 crore rupees in a secondary funding round that is led by Z3 Partners. Can you take us through how you plan to deploy these funds and any new offerings in the pipeline?
So, interestingly, this money is going to our existing investors, not to us. It's a secondary round. So, Arundhati, we have been now profitable for the last 3 years at a PAT level. In fact, we've not even touched the money that we have raised in the last 2 rounds. And we are adding to it. The idea is we want to accelerate our growth, and we are actively looking out for some inorganic or M&A opportunities, which is where we plan to utilize what we raised in the last 2 rounds. Specific to this round, as I said, it's a happy situation for us because some of our early backers are cashing a very small part of their stake, and there's a decent upside they're getting. That's my definition of value creation for my stakeholders.
So creating value there for your stakeholders. But you know, Raman, as you just pointed out, you haven't touched the funds from your previous fundraise as well. So, you know, you're clearly well capitalized and you're looking for some inorganic growth opportunities. Can you take us through who you're in talks with and the kind of companies you're looking to buy?
Payments is something that connects all SMEs. Payments is now digital. Can we build other digital services on top of payments? For example, this SME needs to pay bills multiple times a month. That's an adjacency. We don't have expertise, so we are looking at some options in the bill payment space. And similarly, outside India, India has today become, when it comes to digital payments, India has become the playbook for a lot of countries in emerging markets. And banks everywhere are in a similar situation. They're struggling with tech. And what we built for banks in India is resonating with banks outside. But for us, to speed up our ambitions outside India, especially in emerging markets like Africa, is where we've just about started looking at opportunities where we can look at existing players in the space who are working with banks, that we can get into some kind of a strategic arrangement to fast track our ambitions.
All right, Raman, you registered 72.59 crore rupees in revenue from operations in FY24 against 42.3 crore rupees in FY23. As you said, you're profitable. Take us through the targets for FY25.
We are already profitable. As I said, we've been PAT profitable for the last 3 years. This year also, we will continue that trajectory. Just 2 more months to go, and we are profitable. We will continue to be profitable. That has been the focus right from day zero, to be self-sustained as far as survival is concerned. And we've been there, continued that trajectory. We just need to accelerate it now.
Absolutely. And you currently support over 3 million merchants across 6 countries. If you could sort of take us through how you plan to grow this, and, what's the global expansion plan, and what's the revenue mix between the geographies?
So for us, interestingly, as I said, we are enablers for banks and large merchant acquirers. We give the banks, they have trust, they have distribution. What they struggle with is nimble tech, which is what we provide them. So we don't need boots on the ground to grow our business. If you look at our clients in India, we work with HDFC Bank, Axis Bank, SBI. Between them, they have the majority of SMEs banking with them. And the distribution is with them. So we are pretty much covered for India. As I said, the focus as of now, beyond tech innovation, is expanding outside India, which is where Middle East is a focus. We have some decent traction in Middle East. Africa, we're just about starting, and that continues to be a geography of significant interest because problems are very similar. It's largely cash or telco-dominated payment space where banks are now wanting to come back. And so is the case with Southeast Asia. So these are the geographies of interest to us. As of now, 90% plus is India. We are looking at international contributing at least about 25% in the next 18 to 24 months.
Right, Raman. Thank you so much for joining us on Startup Street. And we wish you all the best on this journey going forward.
Moving on, Arundhati, it's Friday and it's time to take stock of all the deals of the week. According to Venture Intelligence, this week saw 26 deals worth $195 million. First up, study abroad platform Leap Finance bagged $65 million from Apis Partners, Owl Ventures, Jungle Ventures and Peak 15 Partners. Software services provider SuperOps raised $25 million from March Capital, Addition and Z47.
And that's not all. Workflow automation platform Atomic Work raised $25 million from Khosla Ventures, Z47 Battery Ventures, and a whole set of other investors. Co-working space provider Innov8 added $12.7 million to their cart from JNA Partners and others, while deep tech startup Astrom Tech got $10 million from investors. So far, according to Venture Intelligence, this year saw 195 startups raise $6.9 billion so far.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.